Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 23rd of January 2026. The first chart is the US dollar index futures. They closed lower this week. They accelerated lower. Volume was increased and above the average. It does appear like price has overshot the lows to some degree and it may attempt to recover. But this was pretty weak. Like the market's closed below all these bars lows on increased and above average volume. Weakness may have emerged in this market. There may be an attempt to recover, at least in the near term. And generally you would expect an attempt like that to fail. You often see important levels like this either broken to the upside or broken to the downside, and the market will then attempt to recover back to those levels in response, and it will generally fail. The market will have to show increased strength now to recover back to this level as it was doing through here. It really infers the market will come back to this level and test it for supply. It may go up first, be rejected, and then come down, but something like that. The down bar this week did allow many of the associated markets to accelerate higher in response, as you'll see as we move along. But this is a bit of a question mark here. Did price overshoot its lows and will easily recover back above this level, the lows of the range? Or is price inferring a breakdown? I think you'll probably know the answer fairly early next week, at least by midweek. If price just continues lower, then it's going to come down and test this level for strength. If there's an attempt to move higher, it depends how strong that attempt is. If it's just a weak, lackluster attempt, it's going to fail and price will come back and probably come back to this level anyway. So it's going to be worth watching because this market affects so many of the associated markets. If there's weakness in this market, many of those associated markets are going to accelerate higher, showing real strength. The next chart is the E-mini S&P. This is S&P 500 index futures. And they had the opportunity to move lower this week. And below this breakout line here, you can see that price had the opportunity to move lower. It didn't take that opportunity. Instead, price recovered to close up near the week's high on increased and almost average volume. Holiday volumes appear like they're over now, and the market's trading close to its normal averages. This would suggest the market would like to move higher in response, a recovery like this. However, we haven't seen this market show any real impetus towards the upside for some time. So I would like to see this market move higher. It's spent many weeks trading sideways through here, really going nowhere. I know we've had some holiday periods in that time, and that may be some excuse for the market, but I would like to see this market really show some strength now and accelerate higher. This is the US Treasury 10-year note futures, and they were breaking down. They've shown weakness over the last few weeks. There's a reluctance to move lower. As you can see, price had the opportunity to move lower here, but activity as a form of volume was reduced back to the average, and the close was mid-bar. So the market had the opportunity to move lower. It didn't accept that opportunity, and instead sufficient buying support has come in to sustain price pretty much adjacent to the previous bar's low and its close. So the opportunity to move lower was there. It didn't take that opportunity. There was sufficient buying support in the market to maintain price at a similar level to what it was last week. We'll see what the response is next week. It looks weaker than stronger, but it doesn't look like it really wants to accelerate lower. If it did, it could have easily been down towards these levels this week even, but it's not accepted that opportunity and it's trying to hold on up at this level. So this is a to be continued story, at least for the next week. Next chart is copper price futures, and they recovered nicely this week. We've understandably seen some supply drawn out with the pressure towards moving higher very quickly. We've got the highs of the range through here. These are important highs, and it's a complex high. So we've seen supply drawn out over these 2 weeks. Price came back and consolidated. There was a test for supply below the previous bar's close. Volume reduced, so selling pressure reduced as price pulled back, and that allowed price to move up and importantly close above this little mini level within the range. I think the market will move high next week and perhaps even challenge the highs of the range. It may not be immediately successful, or you may see price just attempting to grind its way through in a form of bullish absorption rather than thrusting its way through in one single attempt. Either way, the market's looking stronger than weaker, and it's likely to attempt to move higher next week, given any sort of favourable trading conditions. Now, if the US dollar does initially attempt to move higher next week, this market's likely to test for supply, similar to what it did this week, below the previous bar's close. And then if the attempt on the US dollar to move higher fails, this market will then move higher in response. You'll get something like that within the week. Gold price futures. Gold price futures just accelerated higher this week. Selling pressure was obviously reduced, and that allowed the spread to increase considerably over pretty much all these recent bars through here. Volume hardly increased at all. It was still slightly above the average, but it wasn't a massive volume like this, where supply was drawn out in the background. So the very wide spread here on slightly above average volume is just showing you that there was all buyers in the market and hardly any sellers. And that's why the market really accelerate higher this week with a very wide spread. Now, in response, you would generally, in an orthodox market, once this momentum eases, you would see a test for supply, and the higher up within the range of the up bar it takes place, the stronger the market. This market's not been trading in an orthodox manner more recently. It's been urgently pushing higher. That's what would be expected under normal circumstances. This market's been a little more unorthodox recently. So I'm not sure that's exactly what's going to happen, or if it does, it may just be very brief for perhaps one day, a narrow spread pullback before the market attempts to move higher again, probably successfully, but we'll just wait and see. That's what you would expect under normal circumstances. Once the momentum begins to ease, price will pull back and consolidate, and that's when you see in a daily chart or a smaller time frame a bull flag in classical technical analysis. That's the period of consolidation in response, and if it's successful, price then accelerates higher again in response. Just be aware this market's not really trading in a completely orthodox manner at this point in time. It may settle down later. At this point in time, it's really racing ahead, showing real urgency. There's almost a scramble for positions underway, and that's causing the market to really accelerate higher. The next chart is silver price futures, and they've also accelerated higher. Gold may have even been a little stronger this week. Spread was very similar to the previous bar, whereas in gold, spread was a little wider. The close was strong. There was no test for supply in response to the bit of supply that we saw drawn out last week in the top half of last week's bar. Prices just accelerated higher. This market's also moving in a more unorthodox manner. There's been no test for supply below the previous bar's close for the last 3 weeks. This market is pushing higher relentlessly. Under normal circumstances, the market would really prefer to consolidate for a period, but the buying support is just so strong at the moment, any attempt to pull back is just met with more demand and price continues to thrust higher. At some point, the momentum would be expected to ease and there'll be a period of consolidation in response. But at this point in time, that time hasn't come. And this week, prices closed much closer to the week's high than it did the previous week when it appeared that supply had been drawn out. So this week's bar is potentially stronger than it was last week. Volume dropped back to the average, or very close to it. So this really was genuine trading, a genuine push higher. Selling pressure was low, and what selling pressure is emerging is just being bought by the buyers. Same with gold. The expected response would be a period of consolidation in response like this, right up high in the range. But this market's not trading in an orthodox manner either. It's a little more volatile under normal circumstances than gold, and it's just pushing higher with no testing for supply. So it's trading in a more unorthodox manner, and that's generally not a good thing. But at this point in time, it's showing no signs of weakness. The next chart is light crude price futures, and they're actually showing some strength as well. Last week's bar, it appears, isn't weakness. This was an absorption bar, and that makes sense because we saw some strength emerging here, some absorption through there, a push higher in response, and then this bar which challenged the breakdown line in the background, and prices moved up and faded lower in a buy the offer sort of manner. And this week, following a little test for supply below the previous bar's close, prices pushed up and closed right at the important level, which is the breakdown line in the background. Breakdown lines are hard to recover back above, and the market's done a couple of weeks' work absorbing supply at this level, just below that important level. And I expect the market will attempt to recover back above this level next week and back into this zone. There will be supply in the market. The absorption over the last 2 weeks will have removed some of that supply, I expect, and a successful recovery above that breakdown line is generally a significant positive for any market. So watch for that next week. If the market does recover back above that breakdown line and it successfully does so, generally you'll see a price push up like this, come back, test it for strength, and then recover back into the market again, and then recover back into the zone again. That would be a significant positive for this market. Into the currencies now. This is the euro-US dollar currency pair. It moved higher in response to the weakness in the US dollar this week, and it's pretty much moved up to the highs of this little mini range in here, and it's trading adjacent to this congestion to the left, which may cause it some issues in the near term and hold it back. Highs of the range come through there. There may be a little bit of absorption required in here, depending on what the US dollar does, before it could push up to that level. This would be reflecting that the US dollar attempted to recover to that level above, and then if it did push up like this, that would suggest that the US dollar continued lower to test that lower level that I showed. We'll see what the pound is doing. This is the British pound US dollar currency pair, and it's closed above this breakout line in the background, above this bar's high, which marries up with that level pretty well. This was a pretty strong move here. Volume increased to above the average. If the US dollar does attempt to recover higher initially next week, price will probably come back and test this level for strength. And then if the US dollar does move lower overall, it'll allow this market to break out. And if the US dollar does continue at the high level for the whole week, I expect the market will attempt to consolidate in here. Next chart is the Japanese yen, and it's also recovered and pushed above this breakdown line in the background. It did appear last week that there was some buying support emerge, and we did suggest that it would probably attempt to recover. Whether it'll be successful, we'll have to wait and see at this point in time. Recovering back above breakdown lines like this is a difficult thing. Most markets aren't able to do it. They attempt to recover like this, and then they break down in response. So there's an attempt underway. Volume was pretty strong, to be honest, strongest volume for some time. So it may be that the market can recover. It'll depend to a great deal on what happens in the US dollar market. But at this point in time, there's an attempt to recover underway. Whether it'll be successful or not, we'll just have to watch and see how that goes over the next few weeks. Next chart is the Aussie dollar currency futures. They really accelerated higher this week. I showed last week that these three bars here showed a reluctance to move lower, and that suggested that market was relatively strong overall. And this week, the weakness in the US dollar allowed this market to push higher, and it really did accelerate higher on just slightly above average volume, so selling pressure was really low. It's pushed right up and closed slightly above this level above. So you may see the market come back to this level in response and just spend a little bit of time in consolidation mode, sort of in here, depending on how much strength there is in the US dollar this week. I expect the US dollar will attempt to recover. I'm unsure whether it'll be successful or not. But at this point in time, this market really accelerated higher. It was showing over the previous 3 weeks that it was stronger than weaker. And it's really showed that this week, and it's pushed higher with some real intent. That bar's standing tall and proud, closing up near its high. Volume wasn't excessive, so there's no obvious anomaly in this market. This was genuine trading and a genuine push higher. This is Bitcoin futures. Bitcoin futures pulled back kind of as expected this week. It did appear that the market was a little overbought just here. We saw that the close slightly off the week's high suggested some supply was being drawn out, which is understandable as the market pushed above the highs of this little mini range. The market's attempting to consolidate here and avoid a further breakdown. You had a pretty serious breakdown here, and to be honest, the market could have continued lower, and it's attempting to consolidate and avoid a further breakdown. It doesn't really want to move higher, at least in the near term. It wants to consolidate, sort of like it did over here, and then it pushed higher once it established that the market was stronger than weaker. At this point, this market hasn't done that yet. It may do so soon, because we noticed that this week's bar closed adjacent to the previous bar's low, but volume, as it pulled back, reduced. So selling pressure was reduced as it pulled back this week. And when selling pressure is reduced, there's less threat of the market moving lower, and that opens the door for an attempt to push higher when demand comes in. So a little more promising this week. I would expect a test for supply early. It may just be over the weekend, but a test for supply early like this. And if supply is found to be low, there may be a push up to the highs of the range. The market really shouldn't be looking to break out just yet. Just take things in slower steps. I know this market is often quite intense, but a little test for supply below the previous bar's close and recovery, volume to be low, showing that selling pressure is low, and then a push up to the highs of the range would be perfect. I'll just reiterate that it was better this week that the market pulled back here and volume was lower. It was below the average. It's the first time we've really seen it since this bar here. This was an absorption bar, and that was generally holiday affected over the holiday period. So it's kind of questionable whether that really was true lack of supply or whether people were just eating Christmas lunch and not really paying so much attention. So this was a better bar this week, was certainly an improvement over the previous weeks, and it's the first time we've had more recently of a lack of supply in the market, and that's what you need if the market's going to push higher. If selling pressure is just high and overwhelming, markets rarely can move sustainably higher in the face of supply being drawn out or selling pressure increasing as price moves higher. It just doesn't happen. You need supply to be low, and it was showing signs of that this week, and that's a positive for the market. Just back to the US dollar index futures quickly. It is a bit questionable as to whether the market's overshot its levels this week or if it's just going to move down to the lows of this range in here. I expect the market will attempt to recover. Whether it can do so or not, I'm uncertain, because the volume does actually match the down bars spread. If that was moving lower like this on below average volume, if volume was down at this level, then you might say it was an overshoot of the lows. But volume was actually increased. There was increased selling pressure, and that was maintaining the push lower. I still expect the market will attempt to recover. I think that it may fail at this stage, and it will move lower, and it'll probably test this level for strength in the coming weeks. I don't think it'll all be next week, but I mean, it could be, but I don't think it will be. I think it'll take a few weeks. The market will attempt to recover. It'll probably fail. When it moves below that bar's low, it would actually be an indication the market really is going to come down and test this level for strength. Okay, thanks for your time. Back again next week. See ya.